Investing money is the way to build wealth and provide a secure future for your family. However, a lot of people, maybe including yourself, are not investing because they are unsure of what investments actually are, which ones to pick, and how to make those choices. I've had comments on past videos asking if they should hire a financial advisor, if they should learn about certain stocks and mutual funds and bonds. And today I'm going to share a few of the different ways that you can learn about investments so that you feel more confident when choosing investments so that you're able to build your own investment portfolio. This is the thing that you need to do so that you're not losing out to inflation. You're not losing out to your peers that are investing when you're not. If you're not investing your money and getting the returns that you really need to get ahead in life, you're going to be losing out. Cash does not keep up with inflation. And if you want to have a retirement, if you want to have a life in your later years where you're not scrounging to just survive on Social Security, you need to be investing. So you might feel scared now, but in this video, we'll talk about a few of the different ways to gain some confidence so that you can actually invest your money and keep up and build a better financial future. So let's look at those options now. The first option that you have is to actually research everything yourself. The fact is, all of the information about different types of investments is already online. There are a lot of different websites and social media channels that can help you learn about investment. Personally, I like a few different ones that are on the written side. That includes Investopedia, NerdWallet, and investor.gov. Those are reputable sources and they can kind of give you information about what investments are, what is a stock, what is a bond, what is a mutual fund. You can learn the basics, and having that basic knowledge is really useful when you're actually selecting the investments inside of your accounts. Honestly, doing a little bit of research and learning what the different types of investments are out there is really critical for any kind of investing you're doing, whether you do it on your own, hire an advisor, or have some sort of other situation that we'll talk about later. But you really do need to know the basics before you get started. So I always recommend going to this first step of researching on your own and learning what these things mean. I promise there are a lot of ways to break it down that make it easier to understand, and it can be really helpful. A lot of these websites break it down really simply and you can understand what they mean. And there's also a lot of tools. I have some on my website that kind of explain investing terms in case you need like a little cheat sheet. I will link that down below so that you're able to just have it all in one place. And I think that you are capable of learning what these mean if you don't know them now. And then that will help you in your investing journey. I do also think there are some really good investment YouTube channels, but beware, there's also some really bad ones and some unethical ones where people recommend certain investments where they shouldn't because they are getting a financial kickback or doing something that is a little sketchy. So always take specific investment recommendations from people online or people that you know in person with a little bit of caution. But learning the basics of like what is a stock, what is a mutual fund, what is a target date fund, learning those things is a great idea and something that you should do. One way to gain confidence in your investments and the choices that you're making is to actually let a robo-advisor do it for you. This is where the robo-advisor actually picks what's in your account for you. This is really helpful for a lot of people because it is a very low cost way for someone else to pick the actual investments for you. And when you do this, they ask you questions like, what is your risk tolerance? Are you really a little bit more cautious and you have a low risk tolerance? Or do you want to get the biggest return and you're okay with the higher risk of losing some money? So you get to answer on a sliding scale with most of them. And then you answer questions about when you're going to need this money, things like that. And then the robo-advisor takes all of those data points and puts it together and creates a little plan for you. And they pick investments based on that plan. You can always start with something like a robo-advisor in your investment account and then progress to picking your own investments or switching to something else when you are ready. This is just a really good, usually low cost option for people. And that is why I recommend certain brokerages because they have this option. And it's really great if you're just not confident in choosing your own investments. And even after learning what the specific investment types are, similar, you still may want a robo-advisor to pick them for you just based on all of the information that they have programmed into the robo-advisor, because that's going to be more information than you probably have in your own brain. An example of a robo-advisor is Fidelity Go. This is the one at Fidelity where you can open an account and choose the option to use Fidelity Go, and they select all of the options for you inside of your account, and they choose the investments, and then you're just ready to go based on the questions that you answered. So this is an option, but a lot of different brokerages have these, so you can always use them. I will leave a few different options for brokerages with good robo-advisors down in the description box in case you need some options. Another way to gain confidence in your investments is to learn about the set it and forget it style of investing. This is basically where you choose an index fund or a target date fund, where you select that fund and then you just continually add money to it over time, buy that investment over time. You don't do anything different. You just buy it over time, dollar cost averaging. You put in some every single time you get paid, or once a year, depending on what the situation is. And then over time, you're buying little chunks of it over and over and over. So the reason why this works is because it is purchasing basically the overall stock market. That's what an index fund does. It purchases everything within certain parameters of the stock market. So as the entire stock market goes up, so does your portfolio. And this is generally what a lot of people that follow certain styles of investing do, including myself. I only invest in index funds currently because I personally don't like stock picking. I found myself really not great at it, and I've had great returns just investing in index fund that follows the stock market overall. Personally, I go with Vanguard funds, so I invest in VTSAX, which follows the market overall. And a similar style to this is picking a target date fund. Target date funds are kind of like the robo-advisors, where the fund picks it all for you. These are based generally on retirement ages, so they will be based on the year that you want to retire. So if you're picking 2055, it will pick a lot of stocks now, and then as 2055 gets closer, it generally changes the mix to add some bonds, make it a little bit less risky, things like that. And this is a great option to do as well, where you set it and forget it, and you can generally trust the big companies' target date funds. They're usually very similar, so it's always an option. And this is actually where I personally got started in investing. My first investment ever was a target date fund at Vanguard, and I really love that I was able to just pick something, set it and forget it for a lot of years and just not worry about it, because that was an easy way for me to get started and then gain confidence as I saw over the years. Yes, sometimes it went down, but it also over time went up. And just seeing that over time, where I set it and forget it, had automated transfers going in and saw that investment rising over time, it did give me a lot of confidence and encouraged me to invest more. If you do want to learn more about index funds and specifically how to pick certain index funds, if you're not quite sure which ones to pick, I do recommend a course from Jeremy at Personal Finance Club. It is a lower cost course, and it does share everything you need to know about index funds. So I will leave that down in the description box as well. I am an affiliate of it. I have gone through the course. It is very valuable, so I will leave that down below. It's a lot cheaper than some of the ones that are like $500. But if you feel more confident choosing something like that teaches you which ones to pick, that is an option. So I'll leave that down below. The final option here is to use a financial advisor. So this one is definitely possible, and a lot of people feel way more confident choosing someone to invest for them. I will say that you need to be careful here, because you need to pick someone that has your best interest in heart. So that would be a fiduciary, where they basically have to act in your best interest, and generally you pay them a fee up front or a certain amount every single year that you know ahead of time, and that is not a percentage of your investments. So you would pay them basically for their time talking to you and advising you and selecting investments for you, but you would not be paying them a percentage of everything you have invested. That is very different. And then you also need to look out for people that call themselves financial advisors but are actually just salespeople trying to sell you insurance or a similar financial product that you don't necessarily need, but they still call themselves financial advisors. So be careful with this. I will leave a link down below for options if you are looking for financial advisors to help you choose investments. This can be something that's hard to even pick a financial advisor, but once you get a good one, that can be very helpful. Another caveat is, even with a good financial advisor, they can make mistakes. They can miss something. A financial advisor can be amazing, but no one is going to care about your money more than you. I've seen this with family members who use a financial advisor, and he was a great one. However, he made a mistake that cost them tens of thousands of dollars just because he wasn't as invested in their specific situation and he just missed something. That can happen. We're all human. So just be aware that even with a good financial financial advisor, you still need to know what's going on. You still need to be educated. You can't just hand over the keys to your future to someone and expect them to handle it with as much care as you would. So you still need to do that first step of researching and understanding what investments are, and then you can get advice from someone else and have someone guide you and lead you, but you still need to be aware of what's happening. So those are a few of the ways that you can learn and gain confidence when you're choosing investments. I know that you can do it. You don't have to be scared of investing money. Yes, losing some money and losing value in your portfolio is possible, but without that risk, you're not able to also get the outsized returns that will put you ahead of inflation, will build wealth for your future, and give you the life that you've always dreamed of. So definitely don't be scared of investing. It is something that you really need to be doing, and I know you can do it. I know you have the ability to learn and to invest. If you need more on this, definitely check out this next video.